Hello, everybody. It's January, start of a new year. Really exciting stuff here. Just give it about 30 more seconds here. People are piling into the room, and we'll get started shortly. All right. Well, hey, welcome everybody. It is January 2024. Brand new year. Exciting stuff. We're excited here at Box. We're going to run through a few things here we're going to be doing. And really excited with some of the things, the tools we're going to be providing, all this stuff. It's going to be a great year. I just want to get started here. Today, joining me is Allison Coldewey, as always, our manager of the pricing desk here, and she did strategic solutions team here at Box. And she's going to go over some exciting stuff here later on. First, she's going to talk about Box, but later on, after I do my market update, she's going to talk about how to provide renewable energy to customers. And really kind of, this is a growing thing. We're hearing more and more customers that are looking for some sort of sustainability stuff. Larger customers are, especially ones that are listed companies, are always going to be required by this, by the SEC. And also pension funds, things like that are investors, even private equity firms, they're requiring this stuff. And so everybody's kind of looking into it. We're going to provide all the ways that really to take care of that. So let's get started here with Allie. Take it away, and let's talk about Box and what we are and what we do here. Go ahead, Allie.
Awesome. Thank you, Scott. And Happy New Year, everybody. Thank you so much for making some time in your morning to join us today. If you don't already work with Box or are just getting started with Box or maybe thinking about working with Box, we just want to take a little bit of time to do an overview and introduce ourselves. Box, or Broker Online Exchange, is your ultimate commercial energy brokering partner. We provide independent energy brokers and affiliates with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts. Box has become the largest network of energy agents, brokers, and consulting firms in North America. We connect a variety of diverse energy partners so they can each benefit from streamlined, efficient options in deregulated natural gas and electricity. You can see how you can scale your energy business nationally with our deregulated energy map here. So you will see that we have natural gas only options available in green. You'll see deregulated states for both natural gas and electricity in blue. And then you'll see a lot of states actually that have limited availability. So the United States is deregulated nationally for natural gas. Most of these areas are pretty heavily regulated, but if you have a customer who is a large commercial industrial customer, somebody who is working in the manufacturing or commercial industrial space, those customers do have the option to shop depending on their rate class and upon their annual consumption. So if you have opportunities in any of these states, any of these markets, feel free to reach out to Broker Online Exchange or to your account manager. It never hurts to take a look at a new opportunity, and we love learning about new markets and new strategies and applying the strategies that we've seen be successful in some of our more mature markets with larger customers to mass market customers and to the smaller medium business customer segment. So lots of options here. On the subject of options, we'll go to the next slide. We are partnered with every major energy supplier in North America, 90 plus. Used to be over 100, but due to some M&A, we're sitting at 90 plus. So you'll see some familiar names there. You'll see your NG, Direct Energy, Energy Harbor. We're going to talk a little bit about those guys in a minute, Constellation and Freepoint. But we also partner with some smaller energy suppliers that provide really niche expertise in their market, and those guys are really invaluable to us as well. So we've got a great mix of supplier partners. We have great relationships in the industry. We're talking to these guys every single day, looking at market intelligence, reading all of their market reports, discussing customers and strategy as far as customer acquisition goes, and the ways that we can better benefit our customers, additional products and services. So if you are interested in doing business with any of these companies and you don't yet, that's another great reason to reach out to Box. A huge reason to reach out to Box is if you're looking to just beef up your service offering. Box is here to help every partner become a full service consultant. We offer all of these services below with a huge team to support you. That's one of the things that I often tell people is a great thing about working at Box is that we have a really deep bench. We have a lot of our team that is just dedicated to supporting our brokers, to facilitating business, to taking away the administrative burden from you so that you can do what you do best and talk to your customers. We offer strategic procurement solutions, pricing optimization models. Many of our executive staff, Scott included, have worked at energy suppliers in the past and developed their product suites. So we're also experts in contract analysis and negotiation, and in that more strategic pricing optimization, where you can really optimize your costs based on what product you're in, what market you're in, what you're choosing to fix, what you're choosing to float, all of that type of stuff. We also offer usage analytics and budget reporting through our platform, Utility Data Box. So a really great service if you're looking to provide, provide budgeting or more analytics, get everything all in one spot and really have all of your customers' invoices in one place. That's a great reason to use Utility Data Box. And as we're going to talk about today, we also work in energy sustainability strategy and benchmarking. So we're going to go through a few of those strategies today. We're going to do a couple partner features just so that you guys know really what we're talking about whenever we're talking about sustainability and strategy. And we're really, really excited about it. This is the year that Box goes green. So if you have a customer who's interested in going green, interested in developing a sustainability strategy, or just being more environmentally friendly, maybe reducing their carbon footprint a little bit, reach out to us. We are happy to help them, and we love having those conversations because there's so many different ways you can attack that particular aspect of your building consumption. Moving right along, we wanted to go through a few really exciting things that are coming either now or very, very soon in 2024. So we have a brand new market opening. It is the first in over a decade. Lubbock, Texas, Lubbock Power and Light is the local utility out there, joins ERCOT. So Lubbock is open for shopping. The switch date will happen a little bit later on, but customers out there now have their ESI IDs. They can now contract with energy suppliers. We do have energy suppliers who are providing prices in Lubbock, not just Matrix, but obviously custom options as well. So if you have customers out in that area, if you're looking for help tapping into that area, give us a call. We've definitely got a few lines out there. We also want to announce that our reverse auction platform is nearing completion and is almost ready to roll out to you guys. So this reverse auction platform, we're so excited about it. We're going to have options for not only very large customers in the government, public, healthcare, schools sector, but we're also able to deploy this software and give customers the experience of having a reverse auction for the small medium business segment, which is really, really cool and really exciting. I know there are a lot of customers who who have heard about these, but they haven't had the opportunity to actually see one or to run one. So we're super excited about it. If you have a customer who you think that would be the deal maker with, absolutely reach out to us. Like I said, we're very near deployment. I think that'll be a matter of weeks here. We also have a brand new tools and resources page in MSC for your toolbox, if you will. We are really excited about our tools and resources page. So that is going to be a page in MSC in our cloud platform that is completely proprietary. It is all ours. And those tools and resources are going to be items like price to compare data. It's going to be items like forward curves and wholesale data. It's going to be a lot of training videos on MSC and how to best use the platform. And we may even start loading these webinars as training services onto it at some point, but we're really, really looking at fleshing that out and adding some really cool tools and resources for you guys just to make your lives easier, make your jobs easier, give your customer better information. And finally, we are again hiring. So if you want to come join our team, you want to come work with me, with Scott, with Lauren, with Benji, with all of the awesome people that we have over here at Box, please come join our team. We would love to have you. We're really interested in, we love working in this space. And if you're interested in working in this space, feel free to reach out to us. We are looking for new team members. And with that, I will pass it back to Scott for our market update.
Thank you, Allie. Hey, I'm super stoked about some of these changes. This reverse auction is going to be really neat. We are going to be able to provide it for customers as low as 1 million kind of kilowatt hours a year. And it's when you go in a customer and show them how we're going to do it, it's going to definitely prove to them that we are going to get the lowest bid and squeeze every little ounce we can out of suppliers. So I think it's going to be a game changer for you guys, for us, and it's going to be a best tool for the customer and everybody involved. And definitely some of these tools and resources. We're going to have probably a lot of our webinar subjects coming up are going to be how to utilize these tools. So super excited about that. But let me just go into market update here, and Allie will come back in a few minutes here with the renewable aspect. But energy price update here. Here's the prices, and here's the changes since we talked last month. What's kind of crazy here, if you look at gas, it relatively was slightly up. We had a move, and this is 25, 26, 27. 24, we know in the front had a bigger move, bigger change. Of course, that's kind of come down a little the last few days. That's just because since this point, we had this webinar here, then we said like, oh, end of December is going to be warmer than normal. And it was, but since then what's taken place is we had a beginning of January here. I think everybody in the country's been feeling it, has been very well below normals, but we're going to end a little higher. So we've had this gyrations really in 24, the winter gas, or we kind of hit really heavy lows where it was like, winter's over, not going to happen. And then it kind of showed up a little bit, and now it's showing like, oh, it might be not, it's coming down. But the really big thing here is you look at West Hub down here and ComEd. Look at these big moves, $5 moves, crazy $5 moves. I mean, these kind of gas moves, like a 12-cent gas move, should equate to about, I don't know, like a 60, 70 cent move in power. So this should be about 60 cents. This should be about 75, 80 cents. This should be about maybe $1, and this should be probably about $1.50. And we've had much bigger moves, and the heat rates continue to go out. We thought it has been going out. And, really one of the big reasons why here, if you look at this is the PGM forecast that came out near the latter part of the year last year, and it's really sending moves through the market. This is a very heavy report, and this is kind of, I just took a quick snapshot of it to give a little more detail. If anybody ever wants any kind of more thoughts on this, I have it, or more kind of data. But I took 5-year snapshots from before. This is all in the blue. This is the past, and this is the future. Look at this low growth. Really hasn't had. This is the peak of the peak load. It hasn't really moved much in 20 years. It hasn't moved much, and now all of a sudden we're going to have this next 5 years a $34,000, a $30,000, a 30,000 megawatt move. And continuing going from there. And a lot of that is because of the increased demand on the grid, somewhat by electric vehicles, heavily with electric vehicles and the fleet of that. I actually personally think this is overly ambitious. And, to be honest with you, I just don't see this growth in the next 5 years. If anything, it's kind of, I wouldn't say stalling out. For example, Hertz just announced the other day how they're basically selling their electric vehicle fleet, a big portion of it, to buy gas combustion fleet because there's not much demand for it. And we're also seeing this, I think it's an over penetration this quick as far as what's going to happen. I don't see this happening, but the market's reacting to this, and this is why we're having these forwards up so much in there. And despite the fact that look at the average LMP prices, last 5-year average 38.75. last 12 months, 33.17. And that's the LMP index values, yet here we go. This is the pricing going forward. So yeah, it's interesting. That doesn't mean to be said that you shouldn't have some sort of hedge in place, because we have no idea where gas goes, what's going to happen, but work with us on a strategy. We have strategies in place to kind of mitigate the fact that you're going to overpay, over time as the market comes realizations that it's not necessarily going to happen. It's here. And you look at this 5-year average in gas. I just want to give an example here. 38.75. We're right now, for instance, in 25, 26, 27 gas. We're at about a price here really where it's about 25 cents, 25 cents higher than what the 5-year average has been in gas. So again, going back to everything, that equates really to about equivalent of $39, $40 in power, if you're in a heat rate equivalent basis, and yet here we are. So we'll see here what happens. It's gonna be interesting. A lot of other issues behind that as well. We can really get geeked out here on this. If you want, just call us, we can, and we'll give you some even more information on it. While we're on the topic of index prices, let's look at ERCOT. And one second, let me go back to PJM. So this is right here. With this latest cold swing, we're actually probably going to average, if January comes out the rest of the month the way I expect it to, we'll probably hit around $45 to $50 for January. And that's less than what it was, what we averaged last January, much less, and probably going to be a little cold, going to be colder than it was last January. So I just want to put it out there as well. ERCOT, same similar thing. We have these big day ahead swings in the market. We almost hit a record load for, I'm talking summer included, down there in the cold. Everybody's like, oh my gosh, it's gonna like go crazy with a big test, see what changes they made since Winter Storm Uri. And it passed. I'd give it an A+. Wouldn't you, Allie? Give it an A+? You guys, no one lost power. I haven't heard anybody's freezing. It was a horror story down there, what happened in Winter Storm Uri, and that didn't happen. A lot of the changes, they came in, day ahead prices were up near $1,000 some of the hours, and they would hit like $450 for a day. Real-time prices came in, at a fraction of that. So the resiliency of the grid worked out, the changes worked out. I really want to applaud ERCOT for those changes. And with that, but with that, ERCOT day, these are day ahead prices. ERCOT index prices for January will probably come in around the $55, $60 area, judging from where they're at. But we're hitting prices here. I mean, this last December was in the teens. And on a daily basis, we're seeing on normal weather in the teens. And as this grid gets more and more resilient, it's going to be, prices can be there. But pricing really is relatively fairly priced, I would say, for the most part, is comparison to PJM, with these forward prices and the curves here. And a lot of that's just, look at this ERCOT fuel mix. It's really growing to really, the load's growing, but also really doing a smart job of growing out there. This fleet, you look at the, generation fuel mix here. Natural gas has stayed stable, which is great. They're not eliminating natural gas as a great fuel. Coal's the one that's getting shot down. Look at the wind grow. This is a great chart here to show customers. And nuclear is definitely staying stable. It never really is a big part of it like it is in, like, say, ComEd. But look at solar just coming along, and solar's great because it counteracts with wind, because wind's more of an off-peak, and solar's more of an on-peak kind of thing. So with the back coupled with a lot of battery storage projects, the grid's looking solid in ERCOT. This is a great chart to show customers. Really kind of paints a really interesting picture there. Let's go to the gas storage here though a little bit. Black line here, it's kind of hidden because where are we at now? Because we're just starting in 20. Oh, I didn't change that. 2024. My fault. This is 2024 here. And we are at above the 5-year average. Now, this is a projection based off of where we expect the gas coming all the way through Friday. So it gets us through the cold. I didn't want to just show this to you. Oh, we're above the 5-year average because we just hit this huge cold spell over really a 2-week period here. We're expecting about a 180 withdrawal coming in from last Friday and about 300 withdrawal for the data that's going to come on through this Friday. So this is going to put us a little bit below the 5-year average, but then temperatures will start warming up. And, you know, so I'll show that slide right now. Here's the warm up right here, warm winter returns. This is the end of January. So yay, look forward to that. Everybody can get their bathing suits out and, you know, get ready to go to the pool because it's warming up down there. But anyways, back to this. This is the end of the winter withdrawal. Current week, they'll start a season. This is kind of like where we're at basically from that projection of coming out through this past Friday and with historical withdrawals from there. And this is the expected levels. And so we'll probably come in right around here. I would say 1900 level. Now, if it's a little warm, stays warm kind of through February, March, it's probably gonna be closer to 2000, possibly even. But yeah, so very healthy. We're not, no risk this winter at all. As warm weather returns, you know, and let's go look at the prices here. Last year in March, I remember like when it looked like winter was over, we had the plunging gas, and we felt like, okay, it's gonna be range bound here between $3.50 and $4 for the next winter gas until October hits. Well, I'm gonna repeat it again. It's gonna be about the same as last year, probably range bound between $3.50 and $4 for winter 2025 gas until we show some stuff back. We'll see kind of where it settles in. It could actually be a 330 to 380 kind of level, but it'll bounce around. And you know, that's for winter 2025 gas, which really sets a tone for all 2025 for that matter. But that's what we're looking at now, where the next risk situation could be based off of, hey, what's production coming out, with storage, what's the winter, how did winter 24, how is that going to finish out, all these things. So expect the same here. We'll be talking about this more next month. Yes, Joe, every month we talk about this. LNG export is growing, but this is interesting, a little development from last time. This golden pass here, this is an old chart from EIA. Well, that says, looks like it's starting here. Well, no, that's delayed now to 2025. So these things can get delayed. They rarely speed up. But now this whole growth here is gone. It's about 1.5, 2 BCF this year. That's not going to happen in LNG exports. So it's 1.5, 2 BCF that we're keeping on. And I just fully don't think the market has that completely thought of as priced in. And one of the reasons why I had that big run up, I definitely was quite bearish of that run up because I knew winter was fleeting. This is going to stay this way. Yeah, delay there. We'll see what happens. Another thing too I want to point out about LNG growth is this is the until 2030. This is the expected increase in supply. Here's the global demand increase. So there's going to be a supply-demand imbalance in the favor of supply. Is it going to have a home, all this growth? Time will tell. Here's production trends. Increasing production is just catching everybody off guard, that we're having this big increase in production. It's definitely caught me off guard. I thought we'd plateau around that 102.5, 103 level. We're up here. Granted, the last week or so we've been in mid-90s. That's just because of the cold weather and the freeze-offs that happen. But this is why, because we had this big down. This is usually a 3 to 6 month delay. In where we're showing, we should be definitely have been seen the last month, but no, production keeps growing. Some of it's just kind of a little more efficiency in some of the drilling that has been taking place, but also there's a lot of drilled and uncompleted wells that they've been putting online, and that's like an inventory. So they're like, production is growing because of inventory. So we could actually potentially see this, because look at this, 2/3 of producers are planning to cut in capital expenditures in 2024. That's investments in new wells. So I could expect this to probably go back to the production chart here, probably coming around this 103, 104 level by springtime. I think the market's kind of expecting that as well. So we'll see where that goes, but it's kind of plateauing. So it's going to still have that potential, even with the increase in LNG in 25, 26, that there could be some issues there. You know, we have to keep gas prices a little higher to make it profitable. So we'll see what happens there. Lastly, this is historical gas prices. We like showing this chart because this is kind of like next 12 months is at $2.94 in gas. Here's the reward. Here's from that level. Here's the risk. Here's where prices can gyrate. Here's the reward down here. You know, so be disciplined out there. Just remember, customers are not taking a long position. They're not buying and like, you know, having to consider covering that short position. And relatively speaking, what, you know, electricity and gas, which is some of the most volatile commodities in the entire global world. So that's all I have for today. We love talking about this stuff, so just engage us. We can definitely talk to customers. Just talk to your account executive, and we'll get us on the horn. Talk to you guys later on. Here's Allie.
Awesome, thank you, Scott. Some great info in those that market update, especially things about PJM and ERCOT resiliency. Seems like a lot of really good news, especially for ERCOT as we continue to increase the reliability on our grid. I know I was very happy to not lose power this past week as we had really cold weather. I think it's finally going to start warming up today. We're finally going to be above freezing for the first time in, you know, almost a week, which is rare for Texas. But shifting gears a little bit, we're going to talk about how to provide renewable energy to customers. So as I mentioned, this is the year that Box goes green. We're really excited about it. Our going green, what does that mean? That means that we have a ton of options available to provide renewable energy strategies, solutions, and products to your customers. From small and medium business all the way up to large commercial industrial, regardless of how new the facility is or how large the facility is or what industry the customer works in, they probably have some area where you can help them. This is my favorite meme, I think maybe ever. Renewable energy, I'm a big fan. I love this meme, but really, truly, we love renewables. We love having these conversations with customers. As Scott said about our market update, we love to have those types of conversations and just nerd out on market dynamics and natural gas production, all of those types of things. The other thing, one of the other things that we love to talk about is renewable energy and sustainability strategies. So let's get into those a little bit. First and foremost, with respect to our green and renewable options, the easiest way to provide renewable energy to a customer who says, hey, I want to go green. Now, whether that customer is saying that they want to go green because they are getting some pressure from stakeholders, or somebody, you know, somebody's boss came in and said, hey, we need to be carbon neutral by 2035. Help us figure that out. Or if they're really just looking to do something positive for the planet and they're wanting to say, hey, you know, I would feel better about using as much energy as I do, about using as much electricity and natural gas as I do, if it were green. You know, it would just be, it's something that I'm interested in. And of course, we're seeing a lot of news about, I mean, the Inflation Reduction Act and the jobs created out of that, several of which went into renewable technologies, infrastructure, and helped to boost some options. So the first, like I said, and the easiest way to provide emission-free or renewable credits and energy to your customer is to tack on one of these two products, EFEX or RECs, renewable energy credits or emission-free energy credits. These are best for small and medium business customers that are just looking to offset their carbon emissions. They want to be green, but they don't want to pay an arm and a leg to do it. Or maybe they don't have room for an on-site solar array, or they don't want to mess with their utility infrastructure. If all they're looking to do is just go green and feel good about it, this is the simplest, easiest, most affordable way for them to do it. One renewable energy credit or one emission-free credit equals 1 megawatt hour of renewably generated electricity. So what these credits are a monetized form of green energy. whenever energy is produced from a renewable energy source, whether that's solar, wind, nuclear, hydro, any of those guys, it all gets fed into the same grid. So there's no real way to track which electrons are produced from coal versus wind. And your facility doesn't care. The facility's agnostic. It's going to use the electricity that's generated because that's what it needs. So the REC market and the EFEC market have been created as ways to monetize the renewable attributes of that electricity generation. So when a solar farm or a wind farm produces 1 megawatt hour of renewably generated electricity, it also produces 1 renewable energy credit or 1 emission-free energy credit. These are available nationwide. Like I say here, availability is for custom pricing in all markets. We can provide either of these products. Usually they're a premium to the fixed energy pricing or to the index energy pricing to whatever product. It doesn't matter what product you choose. You can be on an energy only, you can be on a fixed all in, you can be utility billed, you can be dual billed. Doesn't matter. If you want to have green power, you absolutely can. We can source these either as part of an energy supply agreement, or if the customer is looking for, if the customer has already started their energy agreement, let's say they're contracted for the next 3 years, but they want to add renewable energy credits for the rest of their term because they just had a turnover at in their executive suite, and this is a new priority for them. That's totally fine, regardless of where they are in their strategy, how much progress they've made, if any, or if they're just looking for direction. This is a really awesome place to start. Like I said, we have this available for custom pricing in all markets, and we do have matrix options in ERCOT, PJM, and New York. We're working on somebody for New England, I promise. But in the meantime, we do have the majority of these markets covered, where you can go into MSC, pull up a matrix price, and contract right then and there, providing your customer renewable energy options the exact same way, same process, same ease of transaction that you have with Box, with any other fixed energy contract that you sell. So this is an awesome option, especially for the small and medium business customers who are looking to do something good for the planet, are looking to go green, are looking to tell their customers that they just switched to all green energy. This can be the way to go. The next piece we're going to review are 2 solar options. So first up, we have community solar. This functions like a discount subscription service supporting clean energy. And we've done webinars on both of these pieces in the past with community and on-site. So recommend you go and take a look at those. But community solar really truly is a program that works through the utility or through the local regulation. Customers can sign up for it. Usually there's no cost to enroll, nor is there a cost to cancel. These are very long-term options or programs that run, and they can run either in conjunction with your energy supply agreement, or if you're just on the utility and you want to sign up for community solar, you don't even have to enter a supply agreement to qualify for some community solar programs. The only thing about these is, I will say, they are limited availability. The project eligibility and some of the requirements can change frequently. Not every state has this option available. Regulation and these programs are still very much catching up with public demand, in my opinion, because I think we can use a ton more of these programs. But for anybody who has the option to enroll into a community solar program, if they're able and they qualify, absolutely do it. The other option is on-site solar. So with this one, this is a much more expensive option. I know a lot of customers can come to us and say, hey, I want to go green and save money. And sometimes those two go together, like in the efficiency world, which we'll talk about in a little bit, but sometimes they don't. Usually, these solar projects can be large-scale projects where we're sourcing materials, we're installing, panels, we're having engineers on site to survey, to do the install, and then to come back to maintain anything if anything breaks. So on-site solar is a huge commitment, bigger, I think, than some customers realize. But if you're a customer who is a large customer, you have the real estate, the capital, the credit rating to finance it, and that's what you want to do, we have absolutely top of the line partners that can help you achieve that. If you're interested in a full scale solar operation, microgrid, and really truly optimizing your facility, making yourself not only carbon zero, but allowing your facility to totally pull off the grid and give that energy back to the ISO, that's something you can do with on-site solar. You do also have the option to include battery storage or not. So these projects are big. The other thing to consider here, other than the cost, is that the agreements are generally very, very long term. So they're usually 20 to 25-year terms. These are best for customers. Like I said, they own their facility, they have the real estate, they have the capital, they know they're going to be around for the next 25, 50, 100 years, and they want to make sure that they're net zero and that they're keeping up with the times. We do have options available here. And the cool thing about on-site solar or about energy efficiency measures, which we're going to talk about in just a minute, is that they're available nationwide, even in regulated states. So if you have customers where maybe you serve a large facility in one state, but you haven't been able to do anything with the other because the other is in a regulated territory, it's something to explore. There are a lot of different programs, not just for solar, but also for on-site efficiency that run through the utility. There are federal programs. There are all sorts of incentives out there that can help to offset the cost and make these options a reality for some of the medium customer class. If you're interested, if your customer is interested, understand that it's a commitment, but don't hesitate to reach out to us, because again, this is definitely an option. And if your customer wants to proceed with it, really wants to have solar on the roof so they can tell everybody, we have gone solar, we don't need anything from the grid, we produce all of our own electricity, that's totally something that we can help with. The next and final piece here is our green and renewable options on-site energy efficiency and technology. So the cleanest kilowatt hour is the kilowatt hour that you don't use. Not only do you see savings because you don't have to pay for that kilowatt hour, so your consumption comes down, it's also a very different conversation than our usual play with energy supply, because we take out the cost of supply and take out the cost of utility distribution, any taxes associated with it. So the savings and value propositions behind these efficiency projects can be significant. These projects generally decrease consumption by retrofitting or upgrading existing facilities or equipment. That can be a window retrofit, that can be an HVAC retrofit, that can be LED lighting, that can be reworking. We'll talk a little bit about we'll talk a little bit about one of our partners, Abundant IoT, that provides a plug-and-play solution for harmonics. So you can basically install it onto your local transformer at your facility, and it can increase your energy efficiency just installing it, just putting it on. And like we said, their savings are significant. If you're saving 10% of your overall consumption and your overall cost, that's huge. Customers can qualify for federal or local utility rebates like we were talking about. Some of these projects require capital or the ability to finance, but they're not nearly as intensive as on-site solar. Usually with on-site solar, like we talked about, those value propositions for PPAs or VPPAs, those are going to be 20, 25-year commitments, where the ROIs that we're seeing with energy efficiency technology are oftentimes inside of 2 years. And there's a myriad of ways to finance them, whether that's through the capital expenditure budget, through the OPEX budget. So lots of different ways to attack it, but don't leave out energy efficiency. If you're interested in how to have those conversations and how to approach your customers about it, it's really as easy as saying, when was the last time that you that you looked at your building, how much you're using electricity and what equipment is here? Is there any opportunity if we were able to just, put a piece in the middle, kind of plug it in, and that saves you 10% of your overall consumption? Is that something you'd be interested in? Again, just having these conversations, everybody's talking about renewable energy, everybody's talking about energy efficiency. energy or environmental sustainability and government goals, ESG. Everybody's talking about net zero and decreasing carbon emissions. This is a great way to do it. So if you're interested in this option, please let us know. So to review, the bottom line on green. As when markets first deregulated, customers need help navigating the renewable energy landscape, evaluating their options, and negotiating with stakeholders. This is very, very similar to whenever markets first deregulated and customers didn't understand what was going to happen. A lot of Texas customers got put on, provider of last resort because they didn't shop, or got put on, really bad variable rates just because they didn't know that they were supposed to shop. They didn't understand their options. They didn't understand the process, and they didn't have anybody there that said, hey, I think maybe this is worth exploring. And when you partner with your customers, if you're taking that consultative approach to your customers and asking questions, oftentimes they'll tell you exactly what it is that they need, and you can be the person that goes in there and helps them solve that problem. Just like supply procurement, every customer is different. So again, have the conversation, understand the customer, where they're going, their goals, and help them find the right path. Box has trusted partners nationwide in any and all of these areas that are available to help integrate renewables into your customer's energy roadmap and their management strategy. So regardless of the way that they want to go about going green, it can be as easy as tacking on renewable energy credits to their existing supply agreement, or as complicated as doing a full-scale energy audit, doing a full building retrofit, making that building solar, and installing a battery so that it never has to pull energy from the grid again. Regardless of how deep you want to go into that or which route you take, we're here to assist. We're here to assist with you. We're here to assist with the customer. We've done some really great webinars in the past on team selling. So Scott and I are available to help. Your account manager is available to help. If you're interested in these options, in our partners, let us know. We love having these conversations. And finally, we want to shine a spotlight on a couple of our partners. So on the matrix side of things, I wanted to highlight Energy Harbor. These guys are awesome. Their team does wonderful work for us all the time, and we facilitate these types of deals fairly often on the custom pricing side. But they have created a matrix that provides competitive green prices all across PJM, which is one of our most active markets. It encompasses a ton of states, Pennsylvania, New Jersey, Maryland, Illinois, Ohio, and others. So have options available in all of these states. The only caveat is that we do have a 30% minimum load factor, but these options are available. They're in MSC, like we were talking about. It's as easy as selling your customer any other type of contract, but they have a competitive green rate that they get to feel good about. The other partner that we wanted to highlight is Abundant IoT. These guys work on the energy efficiency side of things. They provide an awesome on-site plug-and-play technology suite to quickly improve building consumption. So again, these are shorter projects. They are not as capital intensive, and they can really make a huge difference in terms of the customer's overall consumption and overall cost. They offer a full ecosystem of products in building management and efficiency. So whether that's motion sensors or the plug and play electricity efficiency technology I was talking about before, if you're looking at LED lighting, we've got multiple partners in that space. If you're looking at, just making sure that your HVAC is optimized, something that's very important in Texas, these guys are awesome. We do a ton of work with them. I had a caveat on the Energy Harbor side. We do have a caveat. The minimum energy spend for these guys, where we're really looking for opportunities above a certain threshold, is about $3,000 a month, but that's combined spend of electricity and natural gas. So if you have a customer that's interested in a facility audit, if you have a customer who might be a good fit for any of these plug and play technologies or these smaller energy efficiency projects, reach out to us, let us know. In most cases with these projects, what we want to have is similar to a custom pricing request. We want to have at least one recent bill copy. We want to know if the customer is with the supplier already, what product they're on, just so that we can make sure to watch out for any material change clauses, things like that. But if we've negotiated that contract, that's that's generally not a problem. But we're really looking forward to playing in this space a lot more. We're looking forward to offering more options to you guys and to really getting it out there in the market, using all of our relationships as our loudspeaker. And that's, I think, all I've got. Scott, do you want to add anything to our renewables side, whether partner spotlight or anything else?
Yeah, I mean, I think what's important here is the fact that this is all part of the strategies that you work with customers. If you don't have these conversations with your customer, somebody else will, and then somebody else may offer procurement. So if you just want to be like, all I want to do is this procurement, sell fixed price power, done, I'm out, it's very easy. It's been doing this for 20 years. I'm not going to change. I'll tell you, somebody's going to have this conversation that understands enough to be able to have the conversation at least. And they'll have the conversation. They're going to work a strategy, and they're like, hey, yes, we got that. Now let's talk about your procurement. Oh, and that's you can get taken away. So you got to expand your offerings, and this is a great way to expand it. And Box is a great resource for that, because we have really vetted out our partnership network. For instance, we have two really good partners. Besides, there's also a few suppliers that can do it as well for larger ones, but two really good, kind of on-site solar partners. I had conversations between me and Allie. We had conversations with 15. We vetted them out. We already know these guys are going to be reliable and good, and they've done projects for us. So, and we've arranged, correct, terms for you guys. So really good terms for you guys. So have these conversations and be there. We're getting the question and answers now, and I've seen some questions. I'm going to answer this first one on renewables, and I'll hand the next one to Allie. And really, it's around kind of community solar. What's its effect on the supply agreement? And I'm going to get to that. I just want to answer this real quick, and I'm going to lead to something on this. There's no effect on community solar on supply agreement. The community solar really is truly like a Bed Bath & Beyond coupon. You get 20% off, but it's like 5, 10%, 15% off your power, and that's just the way it is in the bill. It's a discount off the bill. There's no cost to the customer, and there's no difference on the supply portion. They still are getting supply and all that. And so to speak, that's with everything. Even if the customer does on-site solar, has an on-site solar project, that's even more so now you need this special consulting, because there could be a totally different product now for them, because of the different sort of risk exposures that they have if they have on-site and how much they have on-site, which is even more to engage us to work with the customer. The customer needs that kind of really kind of trusted, kind of sophisticated advisor to be working with them. And even in that, there's commissions for you guys on doing the solar and bringing these to the customer, and also at the same time they can do it in the supply. So we'll do that. The next question, I'll let Ellie answer this one, and that we have is around, in most cases, renewable energy is much higher per kilowatt hour. What options are available to counter the increased costs? I'll let you answer that one, Ellie.
So you're correct. Renewable energy is a higher cost. However, the costs that we're talking about are in line, in most cases, that we're seeing with market movement. EFECs are running, 3 to 4 mils, and renewable energy credits or RECs are running a little bit higher than that. That's really monthly movement. Some of the movement that Scott was looking at month over month in power prices was moving about that much. So, I mean, this is something that can be braided into the customer just getting a green option or an EFEC, a REC, isn't necessarily going to save you any money unless you're using it to qualify for a utility incentive or for some sort of rebate. In those cases, those rebates may be able to help a little bit, but what we're finding is in most cases, if the customer wants to go green and it costs them a few tenths of a penny to do it, that's worth it whenever you quantify it that way. Scott, anything to add?
Yeah, I just want to add to that as well that, it can make it look like it's costs more money. It all depends on really how much energy spend is, right? So if it's a manufacturer where the energy spend is, a third of their costs and those costs go up 10%, that can be more significant. Sometimes as customers, this is like 10% of their costs. Those costs go up, 10%. That's just a 1% difference in cost. But also there's a benefit of that with it's been proven that companies that are green have higher employee retention, have better recruiting employees. It's a good marketing thing to be put out to customers. So it's, it has its benefits as well. There's not just the cost side of it. So, there's all different ways of looking at it. It's very hard to find anything where it's going to be a cost savings. It's rare, of course. Community solar, definitely there is, but you can't say you're renewable with community solar. But if you want to really say you're renewable, there's cheaper options, there's more expensive options. It all depends on how far you want to go down it. But really, and one more thing to add to it too. We've seen customers where they've said like, oh, okay, we're going to go into some energy efficiency measures. Bam, they save 10, 15% of their energy costs, and they convert all those cost savings into RECs or renewables, and then it's kind of neutral. Same thing with demand response. You see how much you're going to get paid in demand response, and they put those savings in. So then it's kind of more neutralized on a year-over-year basis of those costs. So, finally, we have, yes, I see another question. We do have some sample from Energy Harbor Abundant IoT report samples. We'll try to get those together. Last question we have here: why are gas and power prices higher in Ebeling and California? That's a great question, and it's a very simple answer is this: both those areas are islands in a way. There's no real really constraint as far as the gas there and the pipeline. So for instance, in California, it's just higher because there's less really kind of ways for them to get gas, or they're much more of a green state. So they're kind of anti kind of fossil fuels and things like that. So you're going to have much more increase. In California, there's the only thing with power, but that's definitely the gas side. Now, NEPOOL, New York did not want pipelines coming through the state. NEPOOL doesn't want them from very rich Marseilles shale area. And if they did, gas prices and power prices could be much lower. And really, it goes to the winter. Winter prices are heavily escalated there, which puts out the whole calendar year. Because in the wintertime, they often have to, in the margin, have to compete on the colder days, have to compete with Europe for the LNG gas that's being shipped because they have no other way to get it in there, which is running $10, $11. So you have gas bases, which is much higher over there. And that's really why. So there's no real way around it, but that's why power prices and gas prices are much higher over there. I think that completes the webinar. Thanks, everybody. Questions were awesome. The attendance was awesome today. And want to also point out to you, this was recorded. It's going to be on our YouTube channel. That will be sent out to everybody as well. And also, the handout is right there. If you want to pull it, we'll wait a few seconds. If you look in the handouts, that's our webinar PDF. We'll be sending out as well. We can pull that down, all the charts and everything on here. We definitely are looking forward to continue to work with you this year. Remember, we're here to serve you. That's our passion. That's our goal, to make you more successful. So have a great day and a great kickoff to the year. So I'll talk to you guys next month. Take care. Bye.
Thanks, everybody.